You are listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 16th of May, 2016. We just ended our third down week since the market turned over and started moving up back on the 19th of February of this year. If you remember, the year started off with a huge down move. The market, from the beginning of the year when it first opened, the week ending the 8th of January, market moved down all the way until February the 12th. Then it started its uptrudge for many, many weeks. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks up. Then back on the week ending the 29th of April, we saw the market start to shudder, start to stop that uptrend and start to move over. It's not crossed over yet going down on our weekly chart, but this is the third ending week. This week ended, of course, last week on the 13th of May. It is the third week down. Now, we are really more sliding sideways. We are going down. We are trending down, but we see the derivative oscillator losing energy. We see the MACD and signal line getting closer together, but we don't have a confirmed down move at this point, but we have stopped the up movement. So let's pay attention. This is the weekly chart. This is the big chart. Pay attention to that kind of stuff, okay? Realize still in a confirmed up move, but it's lost that 10 prior weeks of energy until the last 3 weeks. Now we're going to look at what's actually going on daily throughout the course of the past week. The week started on the 9th. Up day Monday, big up day on Tuesday. Then the market stalled and started moving down. So we were in a confirmed down move on the daily chart since way back on the 25th of April. And the market really sort of slid sideways until about the 28th. Then it started dropping until the 6th of May and then peaked back up, like I said, on the 10th, Tuesday the 10th, and then slid sideways and down. Ended the week down, a down day, down 0.76%. Now that's the total market. That's IYY, an exchange-traded fund that tracks the whole market. Next, we're going to go on our weekly chart to the S&P 500. That's the 500 big companies. Same kind of chart. It started moving up back on the 19th of February after slamming down at the beginning of the year, moved up for 10 weeks. In the last 3 weeks, it has gone down. We still don't have a crossover going down yet, but derivative oscillators lost a lot of its energy. And if you look at the weekly chart, when the derivative oscillator starts losing energy, it typically loses energy and goes in the opposite direction. Now, we can see back in August of last year, it had been losing energy, looked like it had been reversing its down move, and then it sort of slammed down again through September. But we start looking at the green up moves, and pretty much the market moves up until it loses its energy on the weekly chart, and then it rolls over, which is where we are now. We still don't have a crossover going down yet, but again, it sure looks like from the weekly chart it's coming. Always pay attention to the biggest wave of all, and for us, that is the weekly chart. Remember, the bigger the chart, the bigger the time period, the stronger the wave it is, okay? So if you're fighting the down move thinking you're jumping in a good up move for an extended period of time because the market might make you think it's going to do that, be careful. Remember, that big wave always powers everything else. Okay, let's look at what the S&P 500 did throughout the course of the week by going to the daily chart. What do we see? Very similar to what happened on the total market. Monday was a bit of an up day. Tuesday, a big up day. Wednesday was a day where the market started shuddering and then going down Thursday and down Friday, 0.87% for the day on Friday. All right, now going to go back to our weekly chart, and we're going to take a look at our last index before we get to gold is the Qs. What is QQQ? It is the Nasdaq 100. It is actually, it's a little more interesting. It had gone up for 9 weeks, starting around the 19th when the market cleared. That's a February, and started moving up. Then on the 22nd, it started showing some signs of stuttering. We had a red open box candle. Then it was down on the week ending the 29th, and the week ending, that's the 29th of April, and the week ending the 6th of May. Then we have a green open box candle is the way the market ended. It was getting very close to crossing over, going down throughout the course of the past week. And in fact, the derivative oscillator did switch over, but the market did not have enough energy to actually pass through and cross over going down. Want to pay close attention to the cues because it may be the first one to cross over going down in the next week. Let's just pay close attention. When that derivative oscillator flips over on the weekly chart, and we're going to backtrack a little bit, you don't see the derivative oscillator lie to you much. Now, it did one time back in late July of this past year. It started to peg up, looked like it was going to move up, and then it dropped over. We had one false green upper move, and that was during the summer of this past year. So again, once it starts losing big momentum and crosses over going down, typically though, particularly in down moves, it's already crossed. So I would look for that to continue. But again, it's not what I think, it's what the charts tell us. So we want to see that confirmed, okay? Now, let's look at what went on during the week with the Nasdaq 100. Again, remember, those are our technology stocks on the daily. We saw that on the 9th, Monday, the market was up Tuesday, up Wednesday. Again, this is not like the S&P 500 and the total market, and then down pretty solid on Thursday and Friday. Still a confirmed down move on the daily chart, crossed over going down all the way back on the 19th. So pay attention to that. Pay attention to where the weekly chart is. Remember, write that down in your trading journals so that you're able to follow that. One quick aside, I'm thinking about preparing a trading journal for you guys, which would just basically be a form that gives you the things I think you should write down and be following every day. If you think that would be helpful, I'll go to the trouble to do that. Email me, go to Charting Wealth, and let me hear from you. If you're interested in having a little form that you can make into a journal, I think it's very important for you to write down your trading thoughts. It's great to be able to go back and see what it is you've been thinking, what you've been doing. You can so much more easily track your knowledge growth, your growth of skill by being able to go back and having some notes. And I can give you a good layout like I use for actually following that. If I get enough interest, I'll do it for you. Again, go to chartingwealth.com, write to me, let me know you would like that. Okay, lastly, before we get into the news, we're going to go to gold. We're going to look at gold on the weekly chart. Gold has been real screwy on the 2-day and 4-hour charts lately. Why? We see it right here on the daily chart. What do we see? Indecision. Isn't that? And this is the weekly chart. We see indecision. Indecision is always shown by a doji. What's a doji? It looks like a cross on your candlesticks. It means that the market opened and closed right around the same time. It's almost perfectly aligned with how much it went up and went down as far as the wicks go. Means lots of indecision. That's why it's screwy when you look at a shorter chart, because it's not telling you what it's doing. Gold is currently on the weekly chart in a confirmed up move since it switched over going up back on the 8th of January. When the market started going down, gold started going up. When the market started going up, gold went down a little bit and then turned right around and started going up again. Not tracking inversely to the market totally. Now, gold has seen itself rotate over. The derivative oscillator is positive at this time, but again, lots of indecision. We will continue to just see what gold's doing and if it will give us any good signs. But again, remember, it's trending up technically on the weekly chart. What do we see on the daily chart? Crossed over going down. It crossed over actually. It was a huge down move on Monday. That was enough to switch over the daily MACD going down and the derivative oscillator at the same time. And the derivative oscillator continued to gain downward momentum throughout the rest of the week, Tuesday, Wednesday, Thursday, and Friday. And what gold really did during those times, price-wise or candlestick-wise on our Heikin-Ashi type candles slid sideways. That's where we are on gold. Lots of indecision, particularly in the big chart, going down somewhat on the daily chart. That is where we are when it comes to our charts, both the weekly and the daily chart. What are we going to do now? We're going to jump into a review of the news that affected the market over the last week and what might affect it in the coming week as far as events, things that will occur. First, let's jump into U.S. retail sales for April that were reported. They were a little better than expected. They were 1.3% increase. We saw that the German GDP grew 0.7%, and that was doubling the measly Q4 pace. The Eurozone finance ministers are dealing with the Greek debt. And as we sort of dig into some of those consumer numbers, we can see that consumers have loosened their purse strings just a little bit, although, as you can tell from the market review that we just went over, there's no great gangbusters in the market that's pushing things up. In fact, if you read the Wall Street Journal throughout the course of the week or saw any of those articles, there's a lot of doom and gloom, particularly about midweek coming out. We've got the Greek debt relief. Can you believe that stuff is still wrangling around? Well, it is. We also see the Bank of England and the International Monetary Fund are warning the English about getting out of the euro. That would be really interesting if the British did pull back. You know, they've been the one economy that's been careful and has not merged the pound with the euro, protecting themselves on that. So it would be easier for them than others. We also see, for those of you who watch the Fed, you've got a letter going out from the U.S. Federal Reserve Chairman Janet Yellen she's not yelling yet, to a U.S. congressman saying that negative interest rates can't be ruled out as a part of their package if indeed things don't get better. So how does that affect the market? Well, guess what? When there's more free money or even money they pay you to take, well, my gosh, don't you think we will continue to see the stock market move up? Well, of course, that price inflation of free money will continue to push real things like stocks up in value. So again, always be careful. Pay attention to these charts. They're going to save you in the end if you learn to read them and pay attention. And again, what do you need to do with the information we talk about to you? Pay attention to it every day. Watch the markets every day. How much? 5 minutes, 7 minutes, however long our little podcast is. Tune in, listen, subscribe to it at Charting Wealth. Pay attention. It's going to take you 10 minutes. You can do anything for 10 minutes a day, okay? You can do this for 10 minutes a day. Every day the market's open. Pay attention, know what's going on. You're going to be amazed. While everything else is in flames, you are going to know what's going on and going to be protecting yourself and your family. That's what I pray for you, if you will just stick with us. Now, let's talk about what's going to happen in the week ahead. China's going to report its retail sales on Saturday. That's actually going to happen prior to you listening prior to the markets opening on Monday. You're going to see nothing else really until probably like Wednesday. You're going to see the April Federal Open Market Committee meeting notes are going to be released. Their minutes are going to be released. That can have an impact on things, so pay attention, listen out for that on Wednesday. You're also going to see on Wednesday, Eurozone Consumer Price Index is going to be released. That's going to be on the 18th. Then you're going to see on the 19th, Thursday, there is going to be the April European Central Bank meeting. That's going to take place. And then on Thursday, also, the UK is going to release its April retail sales data. And then Friday, the minutes of the Bank of Japan Monetary Policy Committee. Those other things toward the end of the week, if things are particularly bad, yes, they can impact things. The main thing to pay attention to is what's going on with the Federal Open Market Committee. Minutes from April, they're going to be released on Wednesday. That's where we are. Remember where the big weekly charts are, particularly remember what's going on with the Qs, the S&P 500, and the total market. Remember that big chart is what everything else is going to be drawn to. So again, the pace it sets is typically where other things are going to flow. So we hope that you enjoyed this broadcast. We always love hearing from you. Follow us on Facebook, Twitter, Instagram, YouTube. If you appreciate what we do, we ask you to do one thing for us. Go to iTunes. Say something nice about us. Give us a 5-star rating. Don't forget, this broadcast you're listening to right now is available on iTunes under its own name, the Weekly Review and Forecast by Charting Wealth. You can find that on video. Also, if you're just listening to it, it is available on audio. We always load it up with the daily podcasts. Thank you so much. We appreciate you. Hope that you are learning lots, empowering yourself, and ready to continue to learn and empower and know what's going on by being able to read these stock charts. The most important financial skill set you can have. Thank you. From Charting Wealth,